to give us an outlook on Torrent Pharma's prospects going ahead and to discuss the pharma space in general. We are now joined by Sapna Jhawar, Senior Research Analyst at IndiaNivesh. Welcome to the show, Sapna, and thank you for joining us today. Now, the first question that I would want to pose to you is, with the US FDA classifying inspection at the H facility as OAI, what is the unit's revenue contribution of the unit? Because that clearly brings it in focus and will help us understand the gravity of this outcome.
Thank you, Abhishek. So as far as this particular unit goes, the Dahej is, as it is running at only around 50% capacity right now, and it not only caters to US but also to the other emerging markets. So US, from the overall contribution point of view, is very little in the pie. It's approximately somewhere around 10 to 15% of the total sales of the US market. That's what Dahej contributes. And if you were to speak of the future filings and the pending approvals from this facility, they had what in total somewhere around 20 odd filings, out of which 10 were pending in terms of approvals. So considering the fact that the official action initiated is serious in nature, but even if it were to escalate to a warning letter, the impact would be limited to that extent. For the Dahej facility, and I think we've fairly taken that into the estimates going ahead, because once we had seen the observations and there were a few kind of repeats, I think it was fairly estimated that there could be an escalation to it. There was a higher probability to it. So this news piece particularly is factored in the estimates widely.
All right, Sapna. And as a follow-up, talking of impact, in fact, we'll have to wait for the next stage to actually quantify the kind of impact that one can expect. But in terms of, expected impact on the approval pipeline, what is that going to be on back of this, and which key drugs you believe could be impacted, if at all this aggravates to the next level?
So currently, of the 10 filings, we would not have an extensive list of the kind of filings that were made from this plant, because it is largely into the oral solids category. So for us to know, so oral solids, as it is in a very competitive space right now. So we, from the information that we have, we believe that there is no particularly para-4 or exclusive drug that remains pending from this facility, which should actually be materially significant in order to have a very high impact on Torrent's US numbers right now. So we don't expect that to be very high in nature.
You're not expecting that to be substantial. Now, continuing with Torrent Pharma, and in fact, cost rationalization, well, that has helped the company in FY19, at least in terms of margins. Is that likely to continue this year as well?
Not to the extent that we've seen last year, because last year the complete 300 bps expansion that came up in the margins was, driven by the Unicem's cost rationalization motive that they had done. But and since most of that part is complete now, so the incremental expansion in the margins, or particularly that cost rationalization, would only come in from increased productivity levels. So what we expect is, that cost rationalization would be very similar. It will be flattish on a YOY basis. So the impact in EBITDA would also be flattish. We do not believe an incremental surge in the EBITDA for FY20.
All right, Sapna, now let's shift focus from Torrent Pharma to the pharma space in general. And how do you see the domestic businesses across pharma companies shaping up?
So obviously, from the AIOCD data, and it seems that the IPM is undergoing a slow growth phase right now, in a little higher single digits, somewhere in the range of 7 to 8%. But a part of that is also truncated by the seasonality, the delayed seasonality in the acute segment. So that has to be hampered more than the chronic ones. So our sense is that the companies which have a higher contribution from the chronic portfolio should fairly do better. In fact, the growth should be in the range of 12 to 14% for them, versus a company which is highly dependent on the acute side of the portfolio. So key notable again here, would be companies like Torrent, Sun, Lupin, and Glenmark, who have a higher portfolio in the chronic segment, versus companies like Alchem, Because they have a higher focus on the acute side, so they would still be impacted by the seasonality and the slowdown in growth to some extent. Having said that, what we've also seen is that in the past 2 years, it was a difficult time for the Indian pharma, the domestic pharma space, so as to say. But the season is relatively turning better now. I mean, the initial green shoots that show us that there's a revival particularly. We need to wait and watch for another 2 quarters to see whether this will be sustainable or not.
All right.
And
Yes. Now talking of the current trend that we've been witnessing about the pharma companies in general, many pharma companies of the likes of, say, Aurobindo Pharma, Indico Remedies, or Biocon for that matter, have been, of late impacted by some adverse inspection reports. And is pharma still a good sector, according to you, to invest in for the near term, keeping in mind the news flow, which has been quite negative of late?
So it's been actually, pharma sector has been actually been hostage by a lot of factors. So there's been slowdown in the domestic space. Second, the US space has been very competitive in nature. So we've seen those price erosions happening clearly, in the numbers. Thirdly, the companies have also been investing so much in the R&D. And then you have the compliance and the remediation costs, which all comes from the regulations. So meeting all this has come, that has impacted the margins as well as the profitability of all these companies. And everything has been in the turmoil for the last 3 years, if you were to see. So it's not a blanket buy for the sector as such, but yes, we can always be selective and choose and pick the few better stocks in this particular sector who has good business potential to show in the next 3 years, despite all these challenges.
Could name a few of them?
Would be a strategy.
If you could name a few of them in terms of top picks from the space.
Sure. So our top picks in the space, is Torrent Pharma from the domestic space, largely because we believe that at least the growth is predictable in the domestic space. They would be able to grow in the lower teens there, and again, given the push in the margins, and the government is also becoming more saner in terms of price controls and FTC. Now we do not see ad hoc lists coming in, so it will be a more steady based growth there. So that should be, that should be one part of it. Second, they have a good mix of export balance, which is growing at a very steady pace, and if not growing, it's not eroding as well. So Torrent Pharma remains one of our top picks. And amongst the export large cap piece, we would still, give a better rating to Dr. Reddy's than the other ones, because we believe that clearing of the proprietary business will add back to the EBITDA margins. The entire cash that they were burning on the proprietary business will now not be there. So this will add up to your profitability in the near future.
All right, Sapna. Thank you so much for talking to us here on Business Television India. With that, we slip into a very short break. News and updates will continue on the other side. Stay with us.